Good morning. FinMonkeys listeners, I'm Noah Mercer, and you're tuned in to the FinMonkeys Morning Brief. We've got a hot May CPI on the docket, gold taking a breather, and a few market signals that could set the tone for the week. Let's dive in. First up, May's consumer price numbers came in hotter than expected, and the Federal Reserve on track to pause rate hikes at its next meeting. A pause means borrowing costs stay elevated, which could temper spending and loan demand. Second, gold slipped lower as investors digest the looming CPI data, a sign that risk appetite is wobbling. When gold retreats, it often signals a shift toward more cautious positioning across the board. Finally, crypto markets are watching the inflation release close. The hotter-than-expected CPI data has the market framing today's moves, with the Fed likely to pause. Equity valuations are under pressure while bond yields stay elevated. Gold's retreat adds another layer, showing investors are pulling back from safe haven assets. Together, these signals point to a day where volatility could spike if the inflation story shifts, and we'll see how equities, rates, and commodities respond as the numbers roll out. Beyond the traditional markets, crypto is on edge, waiting for the CPI to shape expectations for the Fed's next steps. A Fed decision can ripple through digital asset borrowing costs and overall appetite. At the same time, analysts note modest improvements in the inflation report, yet they warn that price pressures remain a concern. Persistent inflation could keep the Fed on the sidelines of rate cuts, influencing the broader economic outlook. That's the FinMonkeys Morning Brief for today. The next thing to watch is tomorrow's Fed minutes and the next CPI release for surprises. Thanks for listening to FinMonkeys. We'll be back tomorrow with the next market setup.